In today's video, we're going to learn how to identify a reversal setup. And the way that I trade reversals is a lot different than how most people trade reversals. I like to trade the reversal breakouts. The psychology behind the breakouts is what I really look forward to. This is how I trade reversals. Now, there's two ways that I'll trade a reversal. There is a fake out. Every single live trading video you guys see me take for the most part usually has something like this, right? We have a nice move down, people taking profits, and then it continues lower. Somewhere in the live trading video that I post, there's something always like that. Now, usually what would happen after a huge move like this, and that's the key, a huge move, a nice move like this and like this, is people taking profits and then we continue lower. If we don't continue lower, which these are high probable areas to continue lower, so a high probability areas to continue lower, if that gets faked out, the only way that we're going to go is the opposite direction. Why? Because this should continue, right? This has a high probability of a continuation. And if it doesn't, there's only one other way, is the opposite direction. In this case, it's upside, right? That's the reversal. So a lot of people are looking for these puts, right? This is where it starts to H, and it never did. It was a failed H, which is what I like to call it. This is one of the ways that I like to trade reversals, and we're going to go over both today. But here is the failed H, and then the reversal breakout as well. They're both reversal breakouts, but this more so is the reversal breakout. We continue higher, people taking profits. We start to make this base right here, right around that 449.10, and then we continue higher, came back down, and we start retesting that area of 44.9.10. Usually I like to see another reaction there and stuff like that, but for this example, right, wait for the break under that, and that's when you got in. A nice breakdown, right? A nice reversal breakout. But in this video, we're going to be going over the exact reversals that I took. I had this huge move down, right? This is the key. This is what I like to look for. We had this nice move down. We start to come up. This is an H. And then we came right back down. Very heavy selling pressure, right? Especially in this candle right here, and especially these candles. It didn't stop. But then after we had this huge downside candle, we just stopped like that, which sometimes is normal because of how many candles in a row. But after these two candles, it should have continued, and it never continued, which is essentially a failed H right here. And it's not as pronounced, but this is when I got into calls right here. And you guys, I posted this on Twitter on the same exact day it happened, 1 for 1, and I made 24% on this. This is essentially the failed H. After a huge selling pressure like this and it doesn't continue, buyers take it up a little bit. So people are probably taking profits, and then it was supposed to continue down and never did. So this the reversal that we were able to take once it broke past this structure right here. We sold right here, right at this high right here. I think as soon as it passed this and slowed down a little bit, that's when we were fully out for 24%. But that was one of the examples for a reversal. If it's not going to continue down, it got to go up. And this is a high probability area for continuation, especially after this huge move like that is supposed to continue. We'll give it a second. H right here. This is the reversal breakout. Put it right above there. That's when I'm going to get in right there. And remember, I'm only showing you guys examples of the trades that I actually took because it's way easier to come on here and just look at these charts and be like, it's a reversal. I'm only showing you guys the trades that I actually took live. Nice example right here. We had this nice downside move. People taking profits, continue lower, and it doesn't continue lower. It stops, right? Then we had this candle right here. Okay, it's probably going to retest this area right here. I got in when it broke the 377, so right around here, we see it retesting 377. It comes up, right? And this could just easily be a fake out right here for people to the upside. We're coming up, come right back down. I want to see the reaction at 377, whether it wants to close above, whatever it wants to do, right? But this thing went green to red. It looks super weak right here, and it just looks like it just wants to come right back down because how weak this looks, right? Next thing you know, this next candle right here doesn't even go lower. It comes right back up and goes above 377. When I saw that, I was instantly in. I didn't wait for no candle closure. I didn't wait for nothing. When the time of sales was showing me that buyers were still there above 377, and especially this failed H right here, it tried to come up, retest 377, green to red, and you're telling me that candle didn't follow through, and then this candle comes right back above 377. I'll take the risk. I'll take the opportunity any single day right there, and I'll get in. And if I'm wrong in the trade, I'll lose like 10%. And if I'm wrong in the trade, then I'm wrong in the trade. But you got to be able to identify these A plus setups, have a higher probability, and know the risk, right? My risk was going to be right under this low of the candle right here. So right at the 70s area, right? I'm risking 10% to at least make 10% plus on this. And you guys can see this thing just kept going. But you have to understand that everything is a risk, right? There is a potential that this thing could come right back down, but this is at the highest probability area for this to reverse. Usually what I like trading is, straight breakouts, but I also mix in reversals if I see a reversal as well. I take whatever the market wants to give me. I react to whatever the market, is doing. But yeah, I'm usually more of a breakout trader than I am a reversal. Like this downside move yesterday, we were able to catch. But as you guys can see, this is the breakout right here. So right under this 20s and 28 area is when I got into puts for a continuation to downside. But what do you guys notice? We had this nice move to the downside. People taking profits. This is the H, right? To continue lower. And we were able to catch, that was like a 40% trade. But you could have also planned for a nice upside breakout as well. A reversal right in this area. And this is going to be a zone. I don't know if you guys saw my live trading video, but there was a zone right in this area. This would be a nice reversal. I probably wouldn't take it though. Reason being is because these huge wicks right here, right? It depends on how price comes up and it depends on the time of sales. But this is another example of a reversal, right? If this failed, continued lower and then came right back up, that's a nice reversal right there. But we're also looking at other time frames as well, right? I'm looking at the 5 minute. I'm looking at the 15 minute. I'm looking at the 1 hour. I want to see what all of them are doing. And to help see the overall sentiment, right? Because we look at this 1 minute right here. For example, right now we're looking at this 1 minute. Starting to hold up in that low area right there. We go to the 5 minute right here. You guys can see perfect H right here on the 5 minute, right? So this wants to continue, right? We look at a 15 minute right here. So wants to continue. All of these time frames are looking good, right? All of these are looking good. I wouldn't play calls just yet at all. Right? Even though we are at this lower day, I wouldn't play calls. Some people like to play the reversal at the lower day and stuff like that. I wouldn't, just because all those time frames are just telling me not to get in. But if it was earlier in the day, I really don't take trades at 12 o'clock. But if it was earlier in the day, this might be nice for a reversal, right? Looking at all these time frames right here, you guys can see this is the H right there on the 5 minute. Even though this is a longer time frame, right? That 5 minutes is a longer time frame. But look at that 1 hour. That 1 hour is still weak. Depends on what it would do if it came right back up. But you'd use that 5 minute for that reversal right there if it came above that 368.12. But I'm more so on that 1 minute time frame. As you guys can see, like the H right here, right? If this failed, it'd be a nice reversal right there. But you're also looking at other time frames as well to make sure that it all confluences with each other. Because all these time frames are still weak. I want to wait to see what it does in that area, and if every time frame is looking good for reversal, then I'll be able to get in. But that 5 minute, number one, this took way too long, right? This chopping around, came back up, came right back down. Chopping around, taking way too long, number one. Number two, it's the reason why it's like that is probably because it's 12 o'clock right now, so it's not even worth it. But those are literally the setups for the high probability reversals, and you're not going to get that setup every single day. We took a downside move today, right? We took the breakdown under that 371 area to the downside. You're not going to be able to get reversals every single day, and you can't. A lot of people try and force that. They're like, oh, I think this is going to reverse right here, and they're always trying to get a reversal somewhere. The market's not going to always present you with a reversal or a high probable reversal, which is what I like to trade. I'm either trading the breakdown or a reversal, and it's whatever the market wants to give me. Today, it was breakouts. Yesterday, it was a breakout. Right under there, that was a breakout. The day before, though, it was a reversal. And as you guys can see, that was such a nice reversal on Monday. Look at that. We came down, huge downside move, right? This could have been a nice reversal right here if it broke right above that, but it kept going. Every time frame was looking weak. It kept going. That would have been nice though. Look how weak this is. Comes right back up. Okay, there's buyers here. Comes up, comes right back down, retested that, and then continues higher. Shows buyers are in that area, starting to take control in that area, but we don't enter yet until this reversal breakout right around here, right around that high area right there. That's when you would get in. Boom, retested that, not a problem, keeps going up, and then that reversal breakout. This could have been a nice reversal, right, if this failed, but we were able to play the breakout of it. Nice downside move, continued higher, and then boom. That's when we got into puts. Right, and that was a nice 32% trade in literally 1 minute, and you guys saw it all live on YouTube and in the Discord. But if this failed, this would have been a nice reversal, right up there. Because if it's not going to go down, which just had a higher probability of coming down, if it's not going to go down, it's going to fake a lot of people out, comes right back up. Once it gets above that 376.4 with buying pressure coming through the time of sales, I'll be in that because it's going to go right to high day. Because how much sellers were coming in, for them to stop like that, think of like a 200 mile per hour train just stopping out of nowhere just like that. That's how I think of it when it stops at this and starts to reverse. So it's like, if you're able to stop that, if you're able to stop all the selling pressure coming in right in that area and not continue, then there gotta be a lot of buyers. And as soon as these buyers really start taking control, this thing is gonna get uplifted, and this is where our entry would be. Hopefully this video helped you guys. If it did, make sure you guys leave a comment, subscribe, leave a like, and I'll see you guys in the next video. Peace.